But I do think the other commodities are going to turn because they're just very cheap. I don't think gold is expensive. I think those other commodities are cheap. And so I think that the way this is going to mean revert is going to be with the other metals coming up more than gold. I think gold's going to keep rising, but I do think you'll get a bigger rise out of silver, probably out of platinum as well. At some point, these metals are going to move. I just don't know when it's going to happen.
President Donald Trump's April 2nd tariff announcement not only shaken up global stock markets, but also rattled the outlook for the economy and disrupted silver's chance to outperform gold. Silver, however, may soon get another shot. BullionVault's Ash said the last time silver traded this cheaply against gold, in May 2020, silver's dollar price jumped more than 37% over the following 6 months, while gold rose by only 10% in dollar terms. If today's trade war panic plays out like the COVID crash, he said, silver is set to outperform gold 3 times over as economic sentiment rallies. One of the most vocal critics of U.S. monetary policy, PeterSchiff, notes that central banks are buying gold heavily while ignoring silver and platinum. According to him, a sharp dollar decline could trigger major commodity rallies. PeterSchiff underscores gold's resilience, noting its quick rebound from below $3,000 to new highs. Gold's resilience highlights its role as the ultimate safe haven against inflation, unlike treasuries. So, when the U.S. Treasury yields started to go up, it rang alarm bells worldwide. Governments and corporations worldwide are refinancing their debt, which is due in the next year. In times of economic collapse, you can count on gold to keep its value. That's the view of investors known as gold bugs, and during a week when stocks have collapsed and global markets are losing faith in U.S. Treasury bills, their ranks are likely to grow. In a sharp critique, Schiff argues that real de-risking means moving from stocks to gold, not into volatile crypto. As confidence in both treasuries and Bitcoin fades, gold stands out as the last trusted store of value. Historically, gold has been the go-to asset in times of financial distress. During the COVID-19 market meltdown, gold reached new highs, reaffirming its status as a reliable store of value. Meanwhile, Bitcoin plummeted nearly 50% in a single day before rebounding, highlighting its volatility rather than stability. Before diving into PeterSchiff's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market.
You've had a lot of central bank buying of gold, and you haven't had central bank buying of those other commodities. But I do think the other commodities are going to turn because they're just very cheap. I don't think gold is expensive. I think those other commodities are cheap. And so I think that the way this is going to mean revert is going to be with the other metals coming up more than gold. I think gold's going to keep rising, but I do think you'll get a bigger rise out of silver, probably out of platinum as well. At some point, these metals are going to move. I just don't know when it's going to happen, but it will happen, right? And oil is going to go up, and agricultural commodities. I think that, maybe the big drop in the dollar is going to be the catalyst for the big boom in commodity prices, and those commodities, catching up to gold. They're not going to catch it in a sense that they're going to, silver's not going to be the same as gold price, but it's not going to be 100 to 1. It could go back up to 30 to 1. And at 30 to 1, that means, silver has to triple, even if gold just stays where it is. But of course, gold's not going to stay where it is. So getting to 30 to 1 is going to be a moving target. Gold, it had one dip below 3,000, and then it made a new high. I think the record I saw was above 3,360. And that was last night. It made a new record. It's pulled back a little bit now, but it's still, it's still above 3,300. So we're 10% above 3,000. I think it's becoming clear to people who didn't see it before that gold is the new safe haven. It's always been a safe haven, but it's the last one standing. Treasuries were thought to be a safe haven, but I always pointed out they weren't a safe haven because they don't provide safety from inflation. And that's a big risk. And the gold provides that. And there were a lot of people over the last couple of years that were misled to believe that Bitcoin was an alternative safe haven to gold, that it was a digital cousin to gold, right? It even better because gold was analog and Bitcoin was digital gold, and digital is better than analog. But I think now people are finding out. Many are still reluctant to admit this, but they will eventually have to acknowledge this, that Bitcoin is not an alternative to gold if your goal is a safe haven or a store of value or an inflation hedge. Bitcoin can be looked at as an alternative to buying a lottery ticket, or buying a penny stock, right, that has no earnings, right? So, it's a way to gamble on something happening, but that's risk. So when you buy Bitcoin, you are assuming risk, right? If you sell stocks and buy Bitcoin, you're going from one risk asset to an even riskier asset. If you sell your stocks and buy gold, that's a completely different story. That's de-risking, right? That's going to something that's safe or stable. And so people are starting to realize that what they thought were safe havens are not safe havens. And so buyers of treasuries are buying gold instead. And maybe buyers of Bitcoin are buying gold instead.
In the interview, PeterSchiff reveals that America's financial dominance is hollow without real production. He warns China holds the upper hand with manufacturing power. China could spark a global shift by dumping dollars and pegging the yuan to gold. While reflecting on the market, Schiff notes capital is shifting from overvalued U.S. assets to stronger foreign markets. A falling dollar, he says, could free emerging economies and shift global power eastward. According to the U.S. Treasury Department, China is only second to Japan, which holds $1 trillion in U.S. debt. China could theoretically weaponize the U.S. Treasury holdings by dumping them, meaning that it would sell off Treasury holdings for less than they are worth. By doing so, China would then devalue the U.S. dollar because of the amount it owns. China has been secretly stockpiling large amounts of gold, likely in preparation to revalue the yuan higher against the dollar and partially peg it to gold. Central banks, especially in emerging markets, have been significant buyers of gold as they diversify reserves away from paper currencies. Ultimately, he foresees an unstoppable trend, including collapsing U.S. financial credibility, a return to Fed-driven money printing, QE, and runaway inflation, culminating in a massive economic crisis. Let's get back to the interview.
Donald Trump thinks he's holding a royal flush. He's got a busted inside straight, right? He's drawing. He's never going to fill it. He's got nothing. He's got China's got the cards. Besson says, "Oh, we're the deficit nation." Yes, we are the deficit nation. That's our problem. They say that China wants what we have. What do we have? A printing press? They got a printing press. We want what they have. The products that their factories produce. They've got the stuff. And if you produce it, you can consume it. We can't consume what we don't produce, right? There's more of them than there are of us. There's triple the population. There's almost 1 billion or maybe 1 billion people in China. We got like 340 million. There's no shortage of consumers in China. They got plenty of consumers. What we have a shortage of is factories and supply chains and skilled workers. That's a big problem. They don't have a problem finding consumers for their stuff. Anybody will consume, right? And the way to do that is weaken the dollar and strengthen the yuan. So China can kill two birds with one stone. Dump their dollars, dump their treasuries, dump their U.S. corporate bonds, and whatever dollar-denominated debt they have, buy gold, right? So diversify out of the dollar, peg their currency to gold. The yuan goes way up, and now all the Chinese are enriched. All the Chinese now have a huge purchasing power. They could buy all the goods that they were shipping to us, and we're the losers, right? They just take our purchasing power. Now China's got all the wealthy consumers. We just got a bunch of paper that nobody wants. I think it's difficult. I mean, I think Trump is going to try to dig himself out of this hole by kind of pretending that this is all part of his master plan and it's all going exactly the way he planned it in his 4D chess game that nobody else can understand because he is the greatest negotiator in the world. And none of us can really understand the method of his madness because that's how smart he is. But I think they will announce some deals, with various countries that they will tout as being this major win, but they'll really be insignificant, just cosmetic victories. To the extent that, the US and countries reduce whatever trade barriers they have, yes, I mean, that would be a good thing, but not enough to move the needle on the US trade deficits, because that's not why we have them. But, I do think that we've kind of started a process that is going to take on a life of its own. And as the dollar weakens, it will continue to weaken because currencies tend to trend. As, the US, the foreign markets are outperforming, that will continue. For years, it's been obvious to pretty much any, investment portfolio manager that Europe and Asia had better valuations, that stocks were a better deal.
Analysts predict that gold and silver prices will increase in the coming months, with silver outpacing gold. Several factors contribute to this bullish outlook, including the potential for global recession, trade war anxieties, and supply-demand imbalances, particularly for silver. As global dynamics shift and the dollar weakens, will the world witness a return to sound money led by gold and silver? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.